Do you want to invest in real estate but don't have enough money for the down payment? Well, I've got one really good option for you coming right up. Welcome back, guys. As you know, I am the Real Bearded Businessman, and this is the channel where every day we're trying to build that passive income and that active mindset. As some of you may know, this channel right here is one of the ways that I'm trying to increase my multiple sources of income in 2019, but also investing is another one of those streams. Now, while I would love to be able to buy an investment property tomorrow, I just don't have the funds. It's just not going to work out for me that way. So what are my options? I'm talking about REITs today, guys. REITs. They're a great option for those of us that want to jump in the real estate market but don't quite have the funds to do so. Hey guys, I forgot to tell you, in today's video, we're going to do a secret shout out. It's so secret, in fact, that the person's channel that I'm going to shout out doesn't even know it yet. And you know how I found this channel? From down in my comments. A lot of great comments they've been dropping. So let's start talking today about what are REITs? REITs are real estate investment trusts, and essentially you're buying shares in a portfolio of a company that's trying to assemble their portfolio of real estate. So you buy the shares in their portfolio, and they in turn use that money to buy more properties as well as maintain the properties that they have. As far as methods are concerned for how to invest in REITs, there's two main types as far as I'm concerned. You got the public ones, which those are the ones out there on the stock market, and you got the private ones. And those are the ones that you have to be a member of, and you have to buy directly from the company. Some of you may know the most famous private REIT, Fundrise. Now guys, you've got two main categories for REITs. First off, you got the equity REITs. Those are the ones that most of us are familiar with, where they're buying, selling, and renting properties. Those properties are producing income that they in turn put back into the portfolio, but also pay you out most of the time in some dividends. Now, the second type of REIT is the mortgage REIT. Now, in this case, those portfolio owners, they're buying up mortgages and mortgage-based securities, things like that. They're using that and the interest from those payments, and that's how they're producing the income for their REIT. And guys, don't forget that after that, there's all the different subcategories of REITs. Most of them are going to be in that equity REIT, but things like residential houses and commercial buildings, industrial factories, things like that. But I'm not going to get into too many details there in this video. Now, I'm sure some of you out there are thinking to yourself, Real Bearded Businessman, what are some strategies on how to invest in some of these REITs? And at least for me, the easiest one I could say is I approach these things like they're any other stock or ETF out there. I do my research, I try to figure out the future as best I can, and then I go from there. Now, of course, that wasn't an all-inclusive list, guys, but at the absolute bottom and basis of it, what I really want to understand is what's that level of risk in that REIT, and what's the level of risk that I'm comfortable undertaking. Perfect example, guys, is I currently own a commercial REIT right now that invests in commercial properties. And right there, that level of risk is something I'm perfectly happy with, right? So it's not crazy on the growth side. It's not going to like double in price overnight. I hope it does, but it's not going to. But then you take that and you add in the dividend that they pay out, and this one pays out monthly. I'm a happy camper. Oh, and did I mention that dividends are one of the positives of buying a REIT? I don't know for 100%, but I'm pretty sure most REITs out there will offer you a dividend, and that's because that's part of the program that they use, and I believe it's based on the IRS program. That I'm a little shaky on, but most of these REITs will pay you a dividend, and that's super helpful on the growth end, especially when you're doing a dividend reinvestment program. Once I understand the risk, the next piece that I look at is the history of the REIT. Where's this thing been? And the future. Where do I think this thing's going? So now a lot of these REITs you're going to find aren't too terribly old, so there's not a huge amount of historical data, but I'm going to tell you right now that it's very difficult, and I've had extreme difficulties not finding information on REITs. So there's definitely plenty of information out there to get you the historical side. And the future, well, guys, that's kind of where that risk piece kind of comes back in and what you're comfortable with. At least for me, my future is where do I think this thing's going, but also is it going in a direction that I really, and that I can make the risk side work. And guys, as always, you have to do your research and you have to be comfortable with your investment. The toughest part to predict is, of course, future growth. But I think for the most part, a lot of these REITs are going to follow the current stock market and where these interest rates are going. And at least for me, I found that that's kind of held true for the REIT positions that I'm in. And also somehow for the REIT positions I'm in, they've been relatively isolated from the recent volatility here in the stock market. What are some of the positives of investing in REITs? Well, first off, there's a relatively low cost of entry. Some of these REITs can be had for as simple as just buying one of their shares plus whatever fees your brokerage house is going to charge you. Number two is, at least today, in August, there's going to be a little bit less short-term volatility when compared to the stocks and some of the mutual funds that are out there in the stock market right now. Third thing, guys, is with REITs, there are so many subcategories, like I was talking about before, that it's going to be really easy for you guys to find one that is in a subcategory that really hits home to you. And as you guys know, I love saying and I love believing in it, but if you believe in it, you're going to succeed in it. Lastly, guys, the fourth piece to this one here, the fourth positive, is the fact that by investing in a REIT, at least I found, is just by default, by participating in the market, you're going to learn and educate yourself on the real estate market. And I realize it's probably not the same as buying a real estate property, but I got to imagine that, without me having these REITs, I would not nearly have the educational level that I currently have. Like, most importantly right now, trends and signals in the market, and seeing, hey, how do these things react to real estate and how do they react to the regular stock market? Let's start talking about some negatives of REITs here. And I hate to do this to you, but I'm going to hit you with the first one, is that crazy future negative here and how none of us can tell the future. Now, within probably the last year, maybe 2 years, these REITs have been doing really well because I think that the reason that they're doing so well is because the real estate market's been doing so well. But hey, guys, we cannot ever predict the future, and that just means that we have to be that much more, I don't want to say intelligent on it, but we have to do a lot more research and really keep our eye on what's going on. And as always, one of the big question marks, guys, is if they change the Fed interest rate, what happens to REITs? I don't know. I got to be honest with you, I don't know, but I'm making sure I read the news and make sure I stay on top of those trends. The second negative of REITs, guys, is taxes. Do your research. Now, what you're going to find is when you invest in these REITs, some of these REITs are going to pay you via dividends in ordinary dividends, and some of them are going to pay you in qualifying dividends. Now, everybody's financial situation is just a bit different, but at least for me, my income tax rate is higher than my capital gains tax rate, right? So for me, I want to, protect myself. I want to protect myself and find REITs with more of the qualifying dividend payouts to hopefully get a little bit of help there come tax time. And guys, the third negative out there is for all you day traders out there, I'm not so sure that REIT investing is really for you. Why do I say that? Because I feel like, at least from my perspective, all my REIT research, sounds interesting. All my REIT research has shown that a lot of these REITs, or a majority of these REITs, are long-term growth investments and not the high growth in very short duration time periods that you can really buy low and sell high inside of a couple days to really maximize your returns. Like I promised you, here comes the shout out. Today's shout out goes out to Quest to Fire. I'll throw the link down here in the description. And like myself, where I'm trying to document my financial independence journey, she's doing the same over there on her channel. Guys, she's got a lot of great videos on her channel where she teaches you about the FIRE movement, and she has videos on there about her tips and tricks and successes and failures that she's found along the way. Also, I really love watching her status updates on where she is in her journey. So what are you waiting for? Go check her channel out. Lastly, guys, I have to say it, but this video here is all for entertainment purposes. I am not a professional stock trader by any stretch of the imagination. And if investing is something that you're interested in, go out there, go do your research, and contact a professional for some help. Thanks for watching today, guys. Really appreciate it. And as always, I wish you nothing but success on your financial journeys. I'll catch you next time.